Hello, everyone. Good morning. Good morning. Good morning. Apologies for starting a bit late. We apologize that we're having some glitches, so that is why we're starting by this time. So apologies. Please unmute yourself. Let me know if you can hear me. My name is Emmanuel Udogu, reaching from the beautiful city of Benin. So guys, unmute yourself. Let me know if you can hear me. Can you hear me? I've apologized there. We started a bit late, so almost 30 minutes into the time. Sorry about that. So, guys, let me know if you can hear me. Can you hear me? Do we have anybody in the room? Okay, okay, okay. So, get to the chat room. Get to the chat room and let me know if you can hear me, please. Get to the chat room. Let me know if you can hear me. Get to the chat room. Just drop a chat for me. Drop a chat for me, please. Let me know if you can hear me. Drop a chat for me, please. Just drop a chat. Drop a chat for me. So I think I will assume you guys can hear me, then I'm going to continue. Okay. So I think you guys are hearing me right now. Okay, fine, fine. That's good. That's fine. Loud and clear. Pemsky, I can see you there. So like we always do, we like to start from the fundamental analysis, right? So just do a little fundamental because of our time is already we've already used some time, right? Trying to get to this stage. So we'll just go straight to fundamentals. Then from fundamentals, we'll fish over quickly to the chart. Okay. So let's look at the news event we have for fundamental right now. So I'll just go straight to forexfactory.com. So there are several websites you can use to check fundamentals, right? To check the news activity, macro events that can affect the chart, right? So you just go straight to Forex Factory. You're joining us for the first time. This is our money market review, MMR. We do this every trading day, Monday through Friday, one solid hour of market analysis. We give you tips and tricks on how to navigate the market profitably. That means you can navigate, if you like, you can drive the market like rally trade. So you can drive the market profitably by having this insight every day. That means no one single day will pass without you hearing directly from rally trade, trying to know which direction is the right direction. So that's what we do here. Monday, Tuesday, Wednesday, Thursday, Friday from 8 a.m. to 9 a.m. So guys, this is Forex Factory. Let me share my screen real quick. I've opened Forex Factory, but I'm here to share my screen. So I'm sharing my screen right now, guys. So I've been able to share my screen. I'm sure you can see Forex Factory. This is Forex Factory for today being this, for today being fifth, the 5th of June, 2025, guys. So this is Forest Factory. I'm sure you can see my screen, guys. So I've apologized before. Let me apologize once again. We started really late. So apologies there, guys. Take this from me, Emmanuel, right? Apologies. So go. So for Thursday today, as you can see, so our attention is usually on the volatility. So every trader, we are in love with volatility, okay? So we dine and wine on volatility. That means we need movement on the market. So really, the impact is actually the volatility. So once you open the website, your eye goes straight to the impact, okay? So another word for impact there is volatility. If you don't like the word impact, you can replace it with volatility. So there are different levels of volatility uh, news. Okay, so the yellow are low volatility, the brown are medium volatility, then of course the red are high volatility. So our attention is usually on the volatility that will cause some shaking, some movement on the market. So for all of this, they are all low volatility. We don't pay attention to them. So for by 9:30, we have the construction PMI purchasing managers index, right? That will be by 9:30, and that will be on the pound, right? But that's low impact. So our main attention will be we'll shift our main attention to 115, right? So 1:15 p.m. Nigeria time, we have the remaining refinancing rates. And of course, we have the monetary policy statement. So monetary policy statement is very strong impact news for the euro there. So we expect some shaking in the market by 1:15. So guys, I don't know if you guys are still with me, right? Okay, fine, fine. So please call your friends and family members, even your enemies, to join. Okay. I think we've connected again. So I need this number to improve, to increase. So you have your friends that are equally trading. You can send them this link to join us. So by the time they join us, they see the kind of analysis we do here. They too, they also call their friends and family. That's how a country grows. Okay, that's how a community grows. So guys, so by 1:30, we have unemployment claims like we always do. That's the weekly news, unemployment claims in the US. Okay, so all of this news is just for it, it's just to alert you that these are volatility time. Okay, so these are the time when the market will move forcefully to one direction. And of course, if you have your trading with your normal technical tools, you can always profit them. Okay, you can always profit from them. Or you wait till that particular time, you see the direction the market is going on a lower time frame, 1 minute to 5 minutes time frame. And of course, you can enter immediately and of course seize the move in that direction. So we also have 1:45 p.m. We have the ECB, that's the European Central Bank press conference. Okay, that's a non-data news. So these are the areas, or these are the time where we have high volatility news. So guys, pay attention to them. So pardon me, I'm talking very fast because we've lost some time already. So I will just switch over to my chart right now. They'll look at the technicals, okay? So look at the technical analysis aspect of it. So I'll just switch over to my chart right now. So it is on the technical analysis that we try to now be more precise about the direction. Take trade if we have to, point in the right direction so that you do well, okay? So this is, I've switched over my chart. I've switched over to the chart right now. Please, can you see my chart? Indicate if you can see my chart. Can you see my chart? So if you can see my chart, kudos to you. Uh, let's continue. You can see my chart. Okay, just type chat on the chat room, right? Just do chat. Just do chat. So I'm looking at you guys. I'm waiting for the first person that will just type chat. Okay, okay. Ekpemski, I can see you there. Chat. Thank you very much. Thanks. Okay, let's continue. So this is my chart right here. And of course, I would like to start to look at what the dollar index is doing, right? So where is the dollar index here now? So I'd like to look at what the dollar index is doing. So USD IDX. So the dollar index is actually used to know the true strength of the dollar, right? So guys, this is the dollar index, as you can see, right? So on the much higher time frame, we can say this is actually on a downward trend. As you can see, we have a very big push to the downside. Remember my type of analysis, try to look at the market for what it is. That's the market structure. We have impulse to the upside. We have another big push again to the downside, right? To destroy this low, to form a new low. So this is how far it came. Then we have an impulsive move again to the upside. This is the impulsive move again. Then we have another big push again to the downside. So this move to the downside, you can see that it failed. It failed to trade lower than this low. Okay, so let me do something right here. This is the low. This is the last known low. So let's do something like this. So you can see the next move failed to trade lower than this low. Okay, so we call that a failure swing. So we've already seen a failure swing on the US index, right? So you can call your your friends that already trade and hey, there is failure swing in the dog. Guess what? We saw a failure swing. What is failure swing? So write it down. Failure swing is number one, a sign of loss of momentum. Okay. So failure swing put equals sign equals a loss of momentum. So that means the market is losing momentum. So which market? Now look at the chart for what it is. So from this our drawing, you can see that the market was already breaking the lows, right? So if the market is breaking the lows or violating the lows or creating new low, that means the market is going, right? So for a market that is going down and losing momentum, what does it mean? So let me hear from you. For a market that is going down and losing momentum, what does it mean? A market that is going down and losing momentum. So let me engage you guys this morning, right? A market that is going down and losing momentum. What does it mean? What does it mean? What does it mean? I'll just get maybe 2 or 3 answers from you guys. I'll continue. A market that is going down and losing momentum. I'm looking at your chart right now. Olarin, why you say reverse back? Okay, reverse back to where now? Reverse back to where? A market that is going down and losing momentum, we say reverse back. Okay, maybe going down, reverse me, reverse to upside. Okay, I guess that's what you mean. Only Olariwaju, the rest of us, we are, what's happening now? Let me hear from you. The market that is going down and losing momentum, with the first thing we said is, okay, fine. You said upward, upside. Thank you very much. MSK, let me hear from you, maybe uptrend. Okay. The rest of us, what's happening? Come out of your hiding places, guys. Okay, let's continue because of our time. So, of course, you're very correct there. So we have a failure swing here. Failure swing, the first sign of the market trying to reverse, right? So the second sign will not be a change of character, okay? So the first sign is that, and the second sign. So that means it simply means we're already seeing sign of strength pushed into the dollar. That's what it means. Sign. We are not seeing the strength, right? But we're seeing sign. You should understand the difference. We're not seeing this trend because practically the chart is showing us lower lows, right? Of course, but we are seeing sign of weakness of that downward trend. Guys, are you with me? So sign of weakness of that downward trend. Okay, so we'll just leave GP. We'll just leave USD index and move straight on to maybe let's start from Euro USD, guys. On Euro USD. So guys, so I already have some trade on the dollar or on the on Euro USD already, right? Because of that strength that we are seeing on the dollar. So I think the profits on that trade is already reducing. But if you look at this chart very well, you will see that the market was forcefully going up, right? It was forcefully going up. Then, of course, we have double highs here. Or let's use a plain chart for it. So on Euro USD, okay, let's use this one. So on Euro USD, the market was forcefully going up, right? This is the market going up here, as you can see. So this is a high, this is a higher high, this is a much higher high, right? And of course, we have a what was it called now? A double top here, right? So we have a double top, and that's where that take profit is. And the market got so very close to take profit. Oh. Some person would have said, hey, why didn't it close, right? Okay. So this is a double top, right? So the market has created a double top. So whenever the market creates a double top, it's actually a magnet. I've said this before. It's a magnet. So that means the market will be forced to move back to that area, right? Market will be forced to move back to the area. So it has created a double top right here. Now, even if you look backward, all of these are simply double top, right? See that these are double top. I can see how fast the market was able to come back to this area. So double tops are actually magnet on the market. I call it a rare, relatively equal highs. So we have relatively equal highs here. So let me type it for you. So we have what we call relatively equal highs here, right? Relatively equal highs. So what is relatively equal high? Relatively equal highs is actually uh, a magnet. So I'll call it price magnet, right? I'll call it price magnet. So relatively equal highs are actually price magnet. So the market have created relatively equal highs. So whenever I see such thing, just have hope that hey, the market is going to come back to the area. So REH mean relatively equal highs, right? So and of course, if you look carefully, this market has been on a very strong upward trend, as you can see. It destroyed this high, and of course, is going up, right? Okay. So it simply means I'll be looking out for opportunities to buy, right? Opportunities to buy. So opportunity to buy, I would like to look for support, right? So these are support areas where you can buy. So you can buy somewhere around here, or you can even buy right now because I have a trade going on already for me. So this is the support it actually used, right? So this is the area, right? So you can even buy right now. So if you buy right now, it not even be far from my own entry. Okay. So the stop loss will have to be much lower, so we are around here. Then of course the take profit will have to be at this high. So I would like my take profit to even go higher. Okay. But then this relative equal highs are best position where you can put your take profit, guys. Okay. Let's make it a round figure there. So that's for you USD. The next instrument we're analyzing. Okay, I think I've seen your own response, Mr. Coded. You say there's a tendency that is going back up. Okay, fine. Thank you very much for that. So the next instrument we're analyzing is, of course, you know how we roll here, right? It's going to, it has to be GPS, okay? It has to be GPS. So guys, quick one, GPS very quick right now. So I think that's that weakness, that strength we saw in the US index actually playing out to see what USJPY is doing, guys. USJPY is doing something great that I would like to tap into. So GPUSD real quick as our custom is right here. So so this is GPUSD. Sorry. So this is GPUSD right here, right? So I already have a buy on GPUSD also. So and of course that trade too is on profit, right? It's on profit, okay? Mm. So and of course it's actually a buy because of what the chart is. So if you always follow the chart, most of the time you will do well, or you do well up to 60 to 70% of the time, right? Now write it down, write it down. If you always follow the chart, Emmanuel said I will do well 60 to 70% of the time. It's not that you do 100% of the time. You do well up to 60 to 70% of the time. So it means if you're doing well 60 to 70% of the time, it means you'll be making profit, you'll be withdrawing. That's what I want to hear. You'll be withdrawing. Why? If you're trading and you're making profit 60 to 70% of the time, it simply means, and of course, in that your trade, you have to be using what we call a good risk to return ratio. So if you're hearing it for the first time, write it down. You'll be using a good risk to return ratio. It simply means if you're trading and you're doing well up to 60 to 70% of the time, not 100%, but 60 to 70% of the time, and you're having a good risk to return, it means when you win, you're winning far more, your profit is far bigger than your stop loss. So that's what I mean by a good risk to return ratio. It simply means you can do something like 1:5, 1:3, right? For example, this one now is 1:3, right? It's not 1:3, but I'm very sure it's more than 1:2. Okay, so this is one, right? This one just 14 pips, and this is two. How many pips? 32. So that's far more than 1:2, right? So your take profit target is always far bigger than your risk target. You always do it, and of course, and you're doing that on the 70% win rate. Come on, guys, you do it. So what this chart telling us? So if you look technically, you can see that we started having some higher highs here, right? So the market started stepping up to the upside, guys. As you can see carefully, then of course you notice like just like we always analyze. So if the market creates a support for you, the next time the market you want to trade on that level, always look out for that support. So this area is already a support. So the next time the market came down to this level, so this is where the buyers have come in. So if buying here, pure, you'd have made this profit. So that is why when we analyze, we try to look at the previous levels of support, right? So that makes trading very easy, very simple. You look at the previous level, what the market have done before. So fast forward to what the market is doing right now. Guys, I don't know whether you guys are following me because I'm talking very fast. Are you guys following me? Are you guys with me? Are you getting value? So if you fast forward to just yesterday and today, right? I mean Wednesday and Thursday today, you can say this level becomes our new local level of support. It simply means most traders will be looking at to jump in at this particular level, right? So you can see for today it has been around this level. Okay, we've gotten the first response there. So Lekbensky, say you're with me. I know you very well. Now you have to be with me. Okay. So we are seeing the first level, right? So this area has to be the area where one can jump in with a buy, right? to target this high, to destroy this high, guys. Remember, we are trading just what we see on the chart, right? We are trading what we see on the chart. We are trading what you see on the chart, right? So guys, I think that is that for this one too. I would still like to, if I move up to a higher time. So one of the ways you can increase you can have a better good risk to return ratio. You just go to a much higher time frame, higher than the one you took the trade from. And of course, you want to adjust your take profit to maybe the highs, right? The highs that you can see. Okay, so this high is actually the high of last week, right? Am I correct? Yes. So this last week high, So the market have destroyed this week high already. Of course, we got a high by, I think, Monday, Tuesday, and by Wednesday, yesterday, the market destroyed that high. So that means the market will most likely be going for last week high. Okay, remember this market moved from highs to highs, right? From lows to lows, and those highs and lows are significant highs and lows. They can be low of last week, last day, yesterday rather, low of last month. So from what I'm saying right here, it might just be the high of last week. Okay, so this is last week high. So let me drop a line there for you. So your target might just be the high of last week. Okay, so if the market is able to achieve the high of last week, I mean, by achieving that level, it's not the kind of achievement. But now by achieving that level, I mean, if the market is able to trade up to that level, okay, you get the point now. So if but the market is able to trade up to that level, it means the market have achieved something very significant, right? Of course, we know at the highs and the lows, that's what we have what we call the liquidity. So for the highs now, for if the market is on an upward trend like this right here, and of course the highs become the target liquidity. So I make both to say this becomes our next target liquidity. So guys, write it down if you're hearing it for the first time. This because my next target liquidity and the price range around that target liquidity is around 1.35977. So very close to 1.36, right? Okay, very close to 1.36. So this market might just be heading towards 1.36, guys. So it's already on 1.356. I'll be heading towards 1.36. And I know once it hits a whole number like that, of course, that's usually a bubble. It may want to rest a little, or we may start seeing the movement to the downside. So by today, so if today ends, and of course it was able to slash or crush 1.36, and of course we'll be expecting Friday to be the day of retracement. Okay, so Friday reversals, just like we always say on the market, Fridays are days for reversal. So if the whole week has been on an upward trend or on moving in a particular direction, Fridays are usually days of taking a breather. So the market may just want to breathe in a little bit or rest a little bit. So I am sure you guys are following this. So if today the market is able to crush this 1.36, that means to trade above this high right here. So this high is actually the last week high is actually 1.359. Okay, so 1.359, very close to 1.36, a neighbor to 1.36, very close. They're living side by side. So if this market is able to crush this 1.35, then of course we are touching 1.36. So that will be fine. That will be good for the market, guys. So take note, that is still a buy condition. Okay, the trade for today is still a buy condition. So what you may likely do is to look for a very good area of support. So that means zoom into the chart very well. Use a lower time frame if you have to look for a support. I've painted one for you right here, right? So if you're very hungry for the profit, you can even jump in, right? And scalp the market. But if you want to wait, you can wait for this particular local level of support. If the market gets here, you may want to jump in, of course. Ride the market with me. That means you're trading what I'm trading, guys. I cannot even get better than this. I'm telling you, you're trading what we are trading. You're trading what we're trading here in Riley Academy. So, guys, when you trade like this, make sure you also have good funds, right? You trade with good funds. So, if you have small capital, guys, what are you doing? What's the market doing in the bank? What is the money doing in the bank? Rather, withdraw it and fund it here. Okay, put good amount in your trading account so that you can be taking advantage of opportunities. And of course, you will never lose a trade. So, the stop loss here is 16, okay, 14. Then of course the take profit is about 48, right? So that's almost times 3, right? That's 1:3. A good one, guys. So I think I've done Euro USD, my darling Euro USD, and of course my darling GP USD. Those two instruments, guys, I don't joke with them. Then the next thing I'm going to analyze, okay. So Larry, one you said I should check US 100. Okay, Mr. Coded. It's just a few numbers that are responding, right, to the charts. Man, the rest of us, what are we doing? Okay, guys. I've done Euro USD. So let me do GBP, so USD JPY, right? Let me do USD JPY. Or should I do, which other am I going to do now, guys? Is it Euro JPY, USD JPY? So get in the comment section. Let me know the instrument you'd like me to analyze. Or I want to do one more currency pair before moving out of currency pair, guys. One more currency pair. Are we there? One more currency pair. That's strength we saw. That loss of momentum we saw on the downward trend on the USD index. It's actually playing out here, right? It's actually playing out here. It's actually playing out here, guys. It's actually playing out here, and of course, all of the profit I have seen has already reduced to this point. But the profit was actually small. I was waiting for more, and of course, but the upward trend is still there, right? Because this level is still our level of support, right? So our support levels are still there. So let me check the instrument. That's I was talking about Euro US, okay? So let me get which instrument you're saying US 100 US 100. I want to do one currency pair, okay? Let's do one more currency pair so that at least we've done three, right? Which one? USD JPY, USD, just anyone that comes to mind. And I want to hear it come from you. Which instrument are you in love with, guys? Which instrument, guys? Which instrument are we doing? So let's do USD JPY, guys. So USD JPY, USD JPY. So USD JPY, let's see what this instrument is doing for us here. So let's do it on. So we saw some strength, right? Infused into the dollar on our dollar index analysis. Then of course that strength is what we're seeing right here, right? So after this big dump to the downside, of course you were expected to rebound. Okay, it's trying to do that, right? After this big dump we saw yesterday, the market dumped heavily, and of course it rested on the support. So this is why we normally lay emphasis on support, right? Don't trade without getting your support and resistance in place. So after that support, we are seeing this moving to the upside, right? So it's a very fine trade, the type I would like to jump in, right, to ride. But then let's see how much the market has moved already, right? So from the opening price, we have done about 62 pips, and this USD JPY can do up to 150 to even up to 200 pips, right? For example, let's see the range it covered yesterday. So yesterday it covered about 180 pips. Can you imagine that, guys? 180 pips. So can such movement happen today? Everything is possible on the market, right? So the market has already done like how many pips now? It has already done about 80 pips, right? 80 pips. They do 180, right? So that means if yesterday and today will be at par, man, that means remain on that 100 pips, guys. So what I'll do, I would like to join this move, right? So I would like to wait. Sorry. I would like to look for a support area, right? A support. So how can we get support in this kind of movement, guys? How can we get support? How can we get support? Very simple, guys. I'll just look at this level yesterday and go into the future, right? That becomes a support. So these are levels one can wait to enter, right? So one can enter aggressively right now, or one can just delay a little bit and look and wait for the market to do a retracement level, right? So if you zoom in, you'll notice, or if you jump down to a much lower time frame, you'll notice there has been some weak around these areas, right? So there has been some weak around this area. So this area, this higher level can equally serve as a level of support, right? So for example, the market have used this level as a support before pushing to this upside, right? So it moved up, it bounced up from here, it came down again, bounced up from there again. So this level is actually a support. So the next level of support on a much lower time. So if you want support much closer to the price level, such that you can enter immediately, you have to switch over to a lower time frame. Remember, lower time frames are actually detail, right? Detail of what the market is doing. So if you want to see more detail, you go down to a lower time frame. So don't allow the time frame to confuse you in trading, right? The time frames are only for detail. Detail. I want to see more detail. Can there still be more support closer to the price? The answer is yes. So you go to a lower time frame, guys. So it means all of these levels I've highlighted are levels where I can stack my entry for a buy, right? I remember you can actually stack, right? Stack means you can do 0.03, 0.08, 0. No, you can stack it like that, right? You can stack it like that for a buy, So you have seen traders stacking their trade. That's how they do it. Right? So you can stack it like that. So that when they move up, guys, that's Christmas coming very early. This is only the middle of the year. But guess what? If it moves up from there, after you must have stacked, right? Of course, when you start also, you also have your stop loss in place. So guys, I think it has started retracing gradually, just like we want it to retrace, right? So if you retrace to this level, guys, so you first enter your first position there. Then your first position can maybe 0.05, right? Or even 0.08, right? If the first one, if you retrace further, then you have to be, it has to be a bigger loss size. Maybe not 0.1 or even 0.15 or even 0.5 if you rate it depending on the capital you have. So guys, so this is what we do here, okay? So we have looked at Euro USD, GP USD, and of course USD JPY. So let's leave USD. Let's leave the currency pair, right? Let's leave currency pair and do gold there. Okay, you say Ekpemski, okay, you have said US 100 and now you're saying USD card. So let's look at USD card. I'm going to honor that because I think so USD card, real quick. So this is USD card right here. USD card. Okay, this is USD card. So let me use a naked chart for that so that we can see clearly. Okay, so this is USD card, guys. So same thing we had on what now? Which instrument was that on the USD index? All right, the chart is looking almost the same thing. But the difference is that this particular one has broken the structure to downside. So there's no failure swing yet, right? So on the USD index, we saw failure swing. For this one, there's no failure swing, right? And you know, failure swing is a sign of loss of momentum, okay? So this impulse to the downside, retracement to the upside, guys. And of course, another impulse. I'm using 1 hour time frame for this drawing. So another impulse to destroy this low to form a new low, okay? Right? So this one, there is no failure swing. So one of the difference between this chart and of course the USD index chart is that there we saw failure swing. Here there is no failure swing. So if there's no failure swing, what can we do, right? So and this is another movement to the upside again, right? Is another movement to the upside again. So one thing we can do is that the market is purely on the downward trend, guys. It's purely on the downward trend. So we want to look for opportunities to sell, right? Opportunities to do what? To sell. So we are trading what we see on the chart. So opportunities to sell are actually these opportunities, right? Opportunities to sell are actually these opportunities, right? So these areas are opportunities to sell. So the only time buyer want to come in is when the market must have broken all of these structures, right? Still opportunities to sell. We are trading what to see on the charts, except you're expecting some unexpected movement from somewhere. But for now, opportunities to sell. We're trading what to see on the chart. But remember, we saw on USD index, we saw some strength trying to come back to the dollar, right? So we saw some strength trying to come back to the dollar. Where is that US index now? So we saw some strength. Where is that US index? US index. So we are trying to just go beyond 9 because of we said it a bit late. Okay, so just bear with me. Okay, okay. So we saw a failure swing here, right? And we said, it may just be trying to move up from here and start going up because of we saw a failure swing. Okay, if there's a failure swing, this is purely a downward trend, guys. So back to our USD index, right? So we are trading purely what we see on this chart, right? Just like we analyze what we saw on that chart. So you analyze what you see on the chart. Yeah. The chart is the truth of the market. Guys, you can do nothing against the chart, but for the chart. So you follow up what you see on the chart, right? So this chart is telling you, hey, this is a purely downward trend. You want to look at opportunities to sell. So this area I've marked for you. If I were you, I would just screenshot, I will snap it, right? So such that if the market gets back to this area becomes a premium price. So these are premium levels where one can actually sell from, right? So this area I'm highlighting for you are premium levels one can sell from. Premium level. Some of us would like, Emmanuel, are you sure this is really going down? Okay, so if you belong to that category, you want to wait until the market actually break this particular low, right? Okay, the market breaking this low is a sign of increased momentum. Okay, so some of you may want to wait until US USD card breaks this low before you want to jump in with it, they sell. Okay, so that will be all for the currency pair. Now let's look at gold, right? Let's look at gold. That precious metal, that shining precious metal, guys. Come on, guys. So let's do some analysis on gold. Then from gold, I'll look at US 100, right? So you've asked for it, guys. You're going to get it from me. You've asked for it, you get it. So US 100. So, but for now, gold. Now let's look at gold. So my analysis on gold is still going to be a buy. Guys, it's going to be a buy. I'm not joking on gold. It's just buying and buying and buying. So you look for the market to give you a discount. So the market prints discounts for you, discount prices. So all of this heavy movement to the downside, they are discount, guys. They are discounts. For example, once you move to the downside, you start looking at the left-hand side for your levels of support, right? So once you see a level of support, guys, then you can be ready to jump in. So as you can see, this particular level I do right now, so these are levels of support. So it means when the price got to this level, a buy is supposed to come in. Then it did a spring, right? A spring is actually a stop hunt. So it should have stopped you out if you have a very close or a tight stop loss, right? Of course. 50% of the time it will stop you out. Another 50% of the time, your hope will save you. Hope of removing your stop loss and hoping that it will turn. That's what I mean by hope, right? So sometimes that hope can save, okay? Sometimes, not all the time, but sometimes. So of course, then afterwards it moves up. Then the second time, of course, see, this is actually the second time. The second time, the third time, the fourth time. So guys, bank on this level of support. Yeah. So on gold, you always bank on the support, right? For this period that gold is heavily pushing to the upside. Before this year end, now we are seeing gold touching 4,000, guys. So bank on these levels of support, right? Your analysis should be more of a buy than a sell. For example, now for today, now we are seeing gold hitting this level, right? One of the challenge of trading gold is just because of, guys, you need good funds, right? You need good fund, and this is actually one of the areas that you can trade well and make more profit for yourself. So technically speaking, this is a high that's higher than this high, as you can see. So the market is already printing higher highs, right? Higher highs on what we call internal structure. So if you look carefully, this is higher highs, right? I mean, the high getting higher. Technically speaking, too, this is a low, and of course, this is a higher low. So, guys, what can you see? So we can see that the market is moving towards the upside again, right? So if we move towards the upside, means all of these highs becomes our target liquidity. So target liquidity one, and of course, much look at the left-hand side again, you get the target liquidity two. So the market will be heading towards crushing these highs. And of course, that will be good for us, right? So you look out for a buy signal. So looking out for a buy signal, I would like to zoom in right here to see much bigger and better. Looking out for a buy signal, right? So, sir, this level I've highlighted is actually one of the levels of support. So let me move down to a much lower time frame. We're going to see much local levels of support that one can actually enter a buy from, right? So, and I would also like to enter this buy. Okay. That's one thing with reducing this zoom. So this is another local level of support right here, as you can see. So this is another area where I would like to enter by, right? So in fact, I would like to enter by, then of course, so that's a buy there, right? That's a buy on gold, guys. Okay, so, but then it's a little bit higher but than my level, but I would have preferred this level. Okay, so the reason for that is that then my stop loss is going to be, so that's a buy there, right? A buy. Oh, a buy on what? Can you imagine that? Where is my gold now? So guys, you analyze gold, you place a buy, right? So I'll figure out what the problem is. So let me switch over to US 100 right here. So US 100. So guys, this is US 100, yeah, US 100. So you asked for it. I think Ekpemsky asked for this one. So US 100. So if you have gold on your chart, I think that instrument is going upward. So you want to enter by there. I'll figure out what why my own did not place a buy of gold. So guys, this is heavily going up now. So in the same way, you also look out for opportunities to buy, right? Opportunity to buy. So Ekpemski, we are still buying right here. So you want to, if I were you, I would not enter an instant buy. I'll wait for the market to retrace a little bit, right? So if market retrace to this level, I want to enter a buy, do more of buying, right? On US 100, US 30, because those are companies, right? So these are areas where you may want to enter a buy, right? So, guy, this is where we're going to draw the curtain. So, sorry, you started a big late, but we also try to extend the time so that we can accommodate every other person. So, guys, thank you very much. This is Emmanuel. Emmanuel. So, let me drop this number here 09026264507. My name is Emmanuel. So, guys, you can reach me on WhatsApp, on call, maybe to clarify something. Thank you very much for joining us on another exciting section here. Bye for now. So, if you have your friends and family in Benin City, guys, call them. Something's happening. Give them this number, guys. Right here in Benin, guys. We're having an explosive event. We're going to start very soon, guys, so that they can come and hear directly. Okay, directly, guys. Thank you very much. Call your friends to join us on our event for today. Thank you very much, guys. Bye for now.